how to blend narrative and playbook into execution. It's a key pathway principle that we talk about in developing traders around when to be active, when not to be active. Hi, my name is Josh. I'm the founder of Trade the Profile. We're a skill development firm for traders who look to be active intraday, specifically in futures, and want to use the profile as a tool to help them assess where other auction participants are at, and ultimately roll that up into a playbook of trade setups that they can replicate over and over again and get towards a consistent and expectant profitability curve. Now, narrative and playbook, what's the difference? When we talk narrative, we're talking about the expectations, essentially the story that we're telling about where we believe the auction is going to go. Answering two questions: where do we believe the auction is trying to go? How good of a job is it doing at that? And then the playbook is when we're active and what our expectations are around that. These are complementary to one another, but I find a lot of traders who struggle to, they feel like they've identified an edge, but they're struggling to execute, or they feel like here's the direction it's going to go. I don't know how to get in there. So using a playbook is a really good way to do that. So what I want to do is look at an example today of a playbook trade that actually gave us some positive excursion. We'll talk about the setup of the trade, where it fit within the narrative, and then ultimately where we stopped out, and see if that gives you some insight into how to execute in a consistent fashion. So we're going to go over here and look at two things. So I've got my trade plan over here on the left, and then a NASDAQ futures chart on the right. Just some quick anatomy so that you know what's going on. We've got both the RTH, or this is a single cash session. This is an overnight session. This is a composite volume profile for the last number of days. And this gives me insight into what's happening as liquidity goes around the world. Okay. What I'm looking at right now is I'm looking at a day where we're about to start in a gap above the prior range. And so, what are my expectations relative to my narrative and my plan? And that's the plan over here on the left. So each day I produce a plan, thinking both weekly and also during a specific session. And for this session, based on yesterday, which was an inside day, meaning we traded completely inside the range of the prior day, we were looking for directional conviction outside of that range if and when it came. And so we've got some directional conviction initially before this market opens. I've got this queued up for replay. And so what were the expectations if we gapped? So over here, I set up three scenarios: whether we open in range, whether we open in the direction of where I believe control is in the auction, or do we challenge that? Do we gap? In this sense, we gapped. So the expectation was towards 16,081 at least, higher towards the daily expected high, which is computed via the options, which gets us close to the high from 2 days ago. But essentially here and here were key destinations if we were able to accept above or gap and hold the gap above the prior range, which is what we're doing. So we're gapping here. As long as we hold this gap, we're going to be looking for the auction to hit these prices and go, and then we'll look and see if we can get a playbook trade inside of that. All right. So I do not enter any trades before the market opens. So we're going to now play this back. We're going to start at 30x speed, and then we'll slow down as we get closer to the area of action. One of the playbook trades that was on my radar for today was a directional open go with. A couple things I'm also noticing narratively is that we have diminishing inventory as we're going higher. What that means is that fewer and fewer participants are active as the auction is moving higher. We're running out of buyers. Now, you can have that going into a holiday, which this is right before a holiday, and we can kind of drift and get repaired after that. However, if somebody doesn't want to take the risk going into the holiday, we could see some hefty liquidation. So definitely want to be cautious of higher prices up here as we see this diminish. All right. But if we break the gravity, then it's just something that we correct another day. All right, so now we're going to play this back, and we're just going to watch off the open as the auction is pushing here. And we're actually going to okay. So far we've hit the 108. So we've hit all of the expected prices higher, very strong buyers. That's what this this here is showing me a high percentage of buyers at those prices. So it's a good thing for them to develop, but very driving. See how strong and directional that is? That should hold. Also, it's an open drive, open so far. So one of the playbook trades that I have is what we call a directional open go with, which would say that if I can hold a pullback in the next 30 minutes, that could give me an opportunity to join this. I don't want to join way up here because I have exceeded the daily expected range. I've exceeded the range for the first hour in the gap, even though it's very strong. I'm looking at what's happening from the inventory standpoint and going, this is not a place to chase it. All right, so patience is in play. All right, we're going to continue to play this out. Okay, continuing to push. Okay, now we're coming back towards the VWAP of the RTH session. So far, nothing to do. We're just waiting for this first half hour to complete and see if we can hold these higher prices and give us an opportunity for that directional open go with. Now, directional open go with, the target's going to be real clear. It's going to be to the upside, making new highs. Now, it's going to be to the upside up here. And, I'm going to find a small time frame trigger to be there. So I know what the target is that would give me the opportunity if this directional open continues to hold. All right, so we're almost. Oh, okay. So here we have actually some pretty big tempo that's coming back, and we're through 50% of that A period. It's increased the probability we could return all the way back here. So we're going to continue to watch this. It could be a different directional open, not the one that we were looking. Oh, right there. Okay. So we're just going to pause this real quick. And what we've got is we've got an open rejection reverse. Okay, so there's 5 open types that we track. 3 of them are directional. Open drives, that's where we open A period and push. Now, we should not go back through that. The fact that we are right back there says very weak. And so actually, I am looking for a directional open go with, but just not the one to the upside. This is to the downside. So expectations. I'm going to look for us to close the gap and ultimately push back toward this 990 area. Okay, which was part of my narrative plan. If the gap failed, I'm looking for us to get back inside of 990. And so I'm going to be looking for opportunities to join this momentum, which has canceled out all of this. Now you'll look at that and go, well, why would you be short here? Shouldn't you buy that? And the problem is that we just broadcast to the entire market that we can't go higher. We went significantly higher and retraced the whole thing. That's going to increase the probability that we're going to continue to the downside. So now what we're going to do is we're going to slow this down quite a bit. We're going to watch this at 1x speed, and we're going to watch the interplay and the entry. Okay, so I'm going to look for, first I got to see this open get taken out. That confirms we've got this open rejection reverse. And then we'll talk about risk. We know we're looking for 990 as a target. Still haven't taken that out just yet. Okay, right there, I'm in entry. So entering on the break of the open, my stop is at 87. Okay, so we'll just put a little line up here so you know where that stop's going to be. And we'll kind of trail this down. All right, and here's our destination. Let me just color that so you can kind of see where we're going to. All right, and then here on that breach is our entry, right on the break of that. Okay, so you can see very clearly the asymmetric opportunity here. Here's the target and the expectation. Here's the risk. Now, additional questions that I want. How should this play? Well, one, this VWAP here should not hold. I should push through that. I should not be able to get back above, clearly, my risk. That's fairly evident. I'm going to clean. So this zone here is in an area where we did not auction in a prior day. So I'm going to clean through that. And any kind of responsive activity is going to get pushed in this direction as we go. All right, let's just speed this up just a second, or just a little bit, so we can see this play out. Step back to kind of see what we're looking for. So we're looking, this area here, 1615. It's a decision area. We'll look for that first, and then on to the target at 990. We're almost finished here with A period, so we should get lower prices in B period as well. This is what we would call selling excess, where the auction has rejected higher prices. So that's very powerful considering how far that we came. Okay, almost a B period here. Let's go speed this up just a second. Okay, came back, tested the open. You can actually add more into the trade at this point with the stop at the open, essentially. Seen aggressive sellers coming in. That's great. We're looking for them to get down to this first decision level here, prior inventory. So now essentially stop at our original open. We're able even to add at 50. Again, this is called a directional open go with. So I have expectations. It's connected to the plan. The plan was that if I couldn't hold the gap, I'd go back towards that 990 area. So as much as I've rejected, this is now increasing the odds that I'm going to go in that direction. And I will pill some off here, on the, basically as soon as I get inside of that prior range, which I'm now in there. So looking for a tag of this first inventory level, and then see if we can get below that. It should take us right down to that 990 area. We're balancing here a little bit. Now, this little balance area, where you can see the auction trading backwards and forwards and actually building some inventory here, is now the area that I really want to defend. I want the auction to stay below this area as we're developing inventory. Even the highest probability trades, don't always work out. So I want to stay below that area. I haven't moved my stop yet. I want to see new lows, and then I'll move the stop to the top of that area. That's one of the things that I see a lot of traders do is they'll prematurely move their stop when there really hasn't been a negation. We move stops from strength to strength. So we have initiating strength. Once we get new initiating strength, then we can move the stop down. So the last initiating strength came from here. So if I make new lows, then I could pull that stop there. Okay, we're building acceptance down here. That all looks good. Okay, there's our new lows. So now we can have our stop here at 45. So we can pull this down. Okay, right into that key inventory level. It's a great place to scale some of the ads out, but again, so far nothing negating this. Very very possible for the auction to spend some more time at this price to try to pull value lower. However, if we get back above this area of low volume and get back to the VWAP, then we could push. So want to be mindful of where we're at. And stopped. Okay. So on the return back through that area that ended the downtrend, said we were more likely to go to this price than this price. Part of this idea is that it has to happen within the first hour that we complete and get to the target. We have not done that. We actually now have buying excess into our counter selling excess back to that volume. So overall, again, initial entry on the break here, added some more here, gives us, cost basis somewhere in here, stop on everything here. So still make a little bit of money, a little bit better if you had scaled some, not quite to the target. So that is a directional open. Go with a playbook trade that blends with the narrative to give you an idea on what you're looking for. It's a great way to be able to show up and know when to act and where to act and what your expectations are inside of your narrative. And I guarantee you, when you start to think in terms of playbook and narrative together, you really see that consistency start to push higher. So if you have any questions, want to talk more about it, feel free to reach out. Peace.